It's all about the definition of emerging markets. Today in the conference, we had a situation where it was kind of pointed out really a focus on the US, UK, Germany, or continental Europe in general. Is that it? And I would definitely say, no, it's not.
Hello, I'm Diego. Today I'm here in Abu Dhabi in our Global Summit. I'm with Clemens from DWS. Clemens, if you can introduce yourself and explain what's your role at the DWS, please.
I'm lifer at DWS, right? I joined in 1998, like 27 years ago. I joined the firm, always on the real estate investment management side, in different positions. Yeah, it was a fantastic ride with the firm, always new challenges, always new entitlements, and a lot of progress. And since 2019, I'm actually running the region in Europe, and since 2020, I'm also responsible for the APAC region.
Today we were discussing cross-border investments. What is your strategy globally right now?
If you think about cross-border investments, and some people were advocating that these new geopolitical tensions and the new tariff paradigm might actually change the value proposition of cross-border investments. And that's certainly something I totally disagree with. If you think about cross-border investments, investors investing cross-border try to do two things. Either their home market is too small for themselves and they would kind of manipulate or destabilize actually their own markets. Think about Norges. Norges is so big. They would, if they invest all their funds in Norway, they would destabilize the economy and the real estate market. So they need to grow abroad. But there are other very attractive reasons to go abroad. And usually it is to find exposure you otherwise don't have. And the better this other exposure is actually not highly correlated with what you can do domestically. It's another word of saying seeking diversification. And that value proposition is very much intact. For me, these geopolitical discussions we're currently having are, from a qualitative perspective, not dissimilar to what we had in the past. Every time has its geopolitical or whatever risk challenges. Our job, it's our investors' job actually to manage them well. And cross-border investments are a very, very reasonable way to tackle those.
Great. In terms of rewards, right? You're still looking mainly for US and Europe, or are you considering APAC or some other emerging markets?
It's all about the definition of emerging markets. Today in the conference, we had a situation where it was kind of pointed out really a focus on the US, UK, Germany, or continental Europe in general. Is that it? And I would definitely say, no, it's not. Emerging markets are more selective, right? If you think about Japan, a real estate market which is huge, reasonably transparent and very liquid, and has no correlation actually with the markets in the Western hemisphere. It's a very, very attractive market investment destination. If you think of Australia, you could argue Australia is not the biggest market in the world, but it's super transparent. It's a very nice proxy for getting UK/US exposure actually in the APAC region. For us, also a core market is South Korea and Singapore. Singapore effectively is only one city, but those are fully eligible global allocation markets for us, and they are not emerging. Admittedly, I don't see a big trend of investments in like Indonesia, Vietnam, Cambodia, Philippines, or Argentina, even Brazil, right? So those are really, truly emerging markets. And I don't see a trend right now to allocate there. We always have global allocators who invest in those markets, but I don't see this massively rising. Where really the debate starts are India and China. China is a market already too big to ignore, but given for obvious reasons, everybody who has a high degree of attachment to the Western world is very reserved currently to invest there. And of course, there are some domestic challenges with consistency of growth, consistent transparency and data being reported. China is a challenge, but there are other parts in the world, like the region where we are here, there is way less fear about the intransparency and the attachment to China. India, to my view, is a phenomenal growth story. It's, so to speak, the China of the future. The GDP per capita, you shouldn't forget that, is still like a tenth of what it is in the US, right? So in the big cities, you might get a different picture, but overall, it is definitely, on average, it's a third world country. But it's a growth of tomorrow, and it's the largest population now globally, and it is a very interesting market. What I do believe what the market is still missing is sufficient return premia for the intransparency in the market, right? And for the currency risk, right? So if you would hedge the local currency towards all the Western currencies, you would have material hedging losses, and that kills to some extent the attractiveness of India still for global capping.
Interesting. And when we talk about Europe, where do you see the best opportunities in terms of countries?
Regionally, I think Germany is in a very, very interesting state of repair. There's again the saying of the sick man of Europe 2.0.
Okay.
Right, so we had this story like in the early 2000s for the first time, and then a lot of reforms, a lot of investments were started, and actually Germany coming stellar out of that. And in that period, what most people recall Germany post the global financial crisis, it was basically the place of stability, consistent growth, low risk. Also, this multipolar strategy that Germany doesn't only have Berlin, it has actually 7 very viable economic centers. And now there's huge opportunity in Germany because growth rates are sluggish for several years now. There was a decent amount of over-leveraging on the land bank owners and on the development side on some of the listed companies. And the big core sector Germany is usually boosting is actually taken out of the picture given redemptions. It is maybe not a once in a lifetime experience opportunity, but it is a material opportunity actually to get with value add business plans to maintain returns in Germany, which has rarely been the case in the past. It's a hard nut to crack, but a very, very attractive one. And then there is a very good story also about Spain and UK.
Everybody was talking about residential and logistics today, right? Do you see any other hiding opportunities, maybe office?
I think the value proposition of residential in Europe is just extremely strong. There is rent regulation, yes, but you can find your way around this supply-demand situation that demand is overwhelmingly strong, and all the policymakers across Europe, except Finland maybe, haven't found a supply answer to the demand question. And that prints fantastic rental growth opportunities, very secure rental growth opportunities in the near future. Logistics, as I said at the panel, is currently sluggish, but it will be the largest beneficiary of the big spending programs in defense and supply chain revamp. And I'm absolutely certain this will come. It will take a couple of years in the true sense of it, probably 2 years to unfold its first effect on the market. So those are very interesting sectors. But I would definitely not push office out. I still don't have good news for secondary office or like office parks and the likes. It's a niche play. It's super management intensive. If you want to extract value out of that, you can get them really, really cheap. It's a really, really hard game, and there are no major trends supporting that value proposition. Very different to prime office in the inner cities across Europe. Office is in very high demand, in particular Class A or premium and grade office. Vacancy rates across Europe are sub 4% or around 4%. That indicates strong rental growth. If you think about large corporates, they pay like maximum 1.5% of their revenues actually for rent. They have the relief that they need less space because a home office came to stay. So they need less space. They can even lower their budgets, but get into premium locations, which then attracts again talent, or it's a very important element in the war for talent. So and I see that office in that regards will remain an investment asset with decent returns, higher risk than other classes, but definitely has its space. On secondary and tertiary office, I actually foresee that it might stop to be an investment asset. It might become actually owner-occupied.
Today we see senior real estate leaders here. What motivates you to attend us today?
For me, it's a fabulous forum. Yeah, everybody coming in a place, everybody's super dense. It's not like Expo 3 days, and everybody's having meeting 30 minutes and so forth. Like really condensed, really senior people attending here. And whenever I attended GRI conferences, I was always benefiting from receiving a different perspective, maybe on the same subject I was thinking about before, but I got a different perspective in a presentation, in a panel discussion, or even a hallway discussion or a dinner setting. I always left GRI smarter than I came.